And from income from other sources, we saw that if you are not falling under four heads of income: salary, house property, PGBP, and capital gain, then you will be falling under income from other sources because it is a residuary head. Yes or no? Yes. And what and all are the kinds of income, specifically we are talking? If you are not falling under four heads, specifically if you are not falling under PGBP, then for royalty, for subletting, and for plant and machinery or furniture, if you are giving for rent and if it is not falling under PGBP, keyman insurance policy, and interest on securities or bank deposits. Yes. And also gifts and dividend, casual income, interest on compensation or enhanced compensation, and if you have forfeited an advance amount, if because the capital asset has not been transferred due to negotiation, on or after 1st April 2014, if that happens, and compensation with respect to termination or modification terms and condition of employment, if the person who is giving compensation is not an employer, subletting of the house, interest on IT refund, any agriculture income you're getting that outside India, from outside India you're getting it, undisclosed income, family pension, sitting fee by the director, or director is getting commission for underwriting or guarantees to the bank, and any kind of remuneration other than employer you're getting, all these will be falling under income from other sources. And so, is dividend falling under income from other sources? Yes. Even deemed dividend also will be falling under income from other sources. So what does deemed dividend includes? One, if the company is giving to either preference shareholder or equity shareholder any kind of assets, yes, and we have to see it, whatever is the value, we should take to the IFOS to the extent of accumulated profit, whether capitalized or not. Yes. And next, if company is giving to the shareholder, either it be equity shareholder or preference shareholder, debenture, stock and deposit certificate, the value of those debenture stock or deposit certificate should be to the extent of accumulated profit, whether capitalized or not. Next, if company is giving bonus to whom? To the preference shareholders. Company generally gives bonus to the equity shareholders, not it should be. If it is giving to the preference shareholders, then to the extent of accumulated profit, whether capitalized or not, will be taken to the income from other sources. Next, liquidated company is giving to the equity shareholder assets. So, in this situation, to the extent of accumulated profits, whether capitalized or not, will be taken to the income from other sources. Yes or no? Yes. And kindly understand, remaining amount will be taken to what? Will be taxed in the hands of shareholder only under capital gains. Yes or no? Yes. And if company is doing internal reconstruction, company is reducing the capital, yes, company is distributing some amount, yes, to the equity shareholder, that also will be taxed to the extent of accumulated profits, whether capitalized or not. Yes or no? And any kind of asset, we will be taking regarding the deemed dividend, we'll be taking it as what? The value of that asset will be taken as fair market value. Next, company, where company is a closely held company and they are giving loans and advances to whom? To the equity shareholder who is holding 10% of the total voting power, or that equity shareholder who is having substantial interest in any concern, and closely held company is giving loan or advance to that concern, or to any person closely held company is giving, but that person is getting that loan or advance for the 10% equity shareholders, then in that situation it will be taxable, yet to the extent of accumulated profits. If it is capitalized, do not, it should not be capitalized, only reserves and surplus, accumulated profits you have to consider. Yes. Yes, you do not have to see whether it is repaid or not, it doesn't matter. And also, if you have if you are a person who has given who has to give the company a kind of goods. For you to give the goods, a company has to give advance for that taking of the goods. So the trade advance. So trade advance will not be considered as what? Will not fall under deemed dividend. Next, if if you are a company, sorry, closely held company is a company who is giving finance, that is the ordinary course of business, then in that situation that also will not be considered. Yes or no? Yeah. And loans or advance we have considered as deemed dividend. Then later on, company, what did they do? They have declared dividend, either final dividend or interim dividend they have declared, and now they are adjusting against that loans or advance deemed dividend. In that situation, it will not be taxed again. Already it has been taxed for the loans and advance. Regarding deemed dividend, it will not be generally taxed again. Yes or no? Yes. And share allotted through demerger, where who was already the shareholders of the demerged company now are getting shares of what? Resulting company. In that situation, this is not considered as deemed dividend. And what is accumulated profits? Profit or reserves which have been created through P&L is called was accumulated profits. Loss should be ignored. Sir, gifts. Is gifts chargeable under the head income from other sources? Yes. But if it is not chargeable under PGBP, or if it is not chargeable under salary, sorry, yes, salary. If employer gives money, it is fully taxable. If employer gives any in kind, if employer gives in kind, then in that situation we have to see the value touches 5,000. If it touches 5,000, then it will be taxable. Yes or no? And regarding if you're doing a business and because of that business you're getting any benefit or any perquisite or any gift, in that situation it will be taxable under PGBP. If it is not because of business, or if it is not because of employer, you're getting any gift, then in that situation it may be taxable under IFOS. Yes. How? If you're getting money, if you're getting money and money for that without consideration, a gift of some X amount of money they're giving us consideration, sorry, without consideration, money without consideration, then you have to see in a financial year, am I getting more than 50,000 rupees? Am I getting money more than 50,000 rupees? If I'm getting, the entire amount is taxable under income from other sources. Next, regarding movable property. What and all are the kind of movable property? Shares and securities, jewelry, drawing and painting, archaeological collections, sculptures, work of art, and virtual digital asset. If only and only these movable properties will be taxable under income from other sources. But other than this movable, other than the following things I said, if these are not covered, some example, car, is it a movable property? Yes, it is a movable property. Whether, but will it fall and will it be taxable under income from other sources? No, no. Only these following movable properties. Okay, and these in these movable properties also, if I'm getting this movable property as a gift without giving any consideration, then I have to see the fair market value in the financial year from everybody. The fair market value, is it exceeding in aggregate more than 50,000 rupees? If it is exceeding, then the entire amount is taxable. Entire amount. You don't have to see what is the fair market value minus 50,000. No, entire amount is taxable. But if you are giving consideration, then in that situation, fair market value minus consideration, the difference, is it great? Is it more than 50,000 rupees? So during this financial year, the entire fair market value minus the entire consideration you have given, is it more than 50,000 rupees? If it is more than 50,000 rupees, then yes, this it will be the difference, fair market value minus consideration, will be taxable. Yes, sir. Yes. And so what about if I am getting gift of immovable property? Then for each property you have to consider. But if I'm getting without consideration, then is SDV more than is sorry is the SDV more than 50,000 rupees in a financial year? If it is yes, in a SDV, stamp duty value, is it more than 50,000? Yes, then in that situation it is entirely taxable. Yes, the SDV amount will be taxable. And what if you have given consideration, but the SDV but the SDV minus consideration, sorry, you have given consideration, and two conditions should be satisfied. First condition is whether SDV is more than 110% of the consideration. If this condition is satisfied, you have to see second condition, SDV minus consideration. The difference, is it more than 50,000 rupees? Is it more than 50,000 rupees? If these two conditions are satisfied, then the difference between SDV and the consideration, the difference between SDV and the consideration, not 110% of the consideration, SDV and the consideration will be taxable under the head income from other sources. Sir. Yes, and sir, which SDV should I take? Which SDV should I take? I should take SDV on the date of registration. But if there is there is a date of agreement and date of registration, it is not same. It is different. Then you have to see on the date of agreement. On the date of agreement, am I getting consideration in the prescribed mode? Yes, bank. Sorry, account pay check, debit card, credit card, UPI, Beam Aadhaar Pay, IMPS, RTGS. Yes, if I'm NEFT, if I'm getting from these in a payment with a partially or fully consideration on the date of agreement, then in that situation I will take what? I will take SDV on the date of agreement, not on the date of registration. Yes or no? This we saw in capital gain chapter itself. No, sir, but the above will not be considered as gift. The above, whatever it is there, it will not be considered as gift. When, sir? If you are getting it from a relative, if you are getting it from the relative, it will not be falling under income from other sources. Or on the occasion of marriage, whose marriage? Your son's marriage, your brother's marriage, or whose marriage? Your marriage, the assessee's marriage. On the occasion of the assessee's marriage, you are getting gift. Then it will not be taxable. Will or inheritance, your parents is giving you that so and so X amount of money, or movable property or immovable property I'm giving you, it will not be taxable. Yes. Or on the contemplation of death, what is this, sir? On the in the deathbed, to any person, the person is giving you. So I'm receiving, I'm the assessee. On the deathbed, somebody is giving me some money, movable property or movable property, it will not be taxable. So trust has been created for the benefit of relative, it will not be taxable. University, educational institute, hospital, medical institute, or trust or institute which is established under section 1023C, it will not be taxable. Or trust or institute which has been registered under section 12A or 12AB will not be taxable. Next, sir, for regarding COVID was a very difficult part. Lot of people did not have money, so government told that okay, during COVID period, because of COVID, somebody wants to help. It is a good deterrent. So the government decided, if you are receiving money regarding the COVID, more than 50,000 also, it will not be taxable. So any person, let it be any person, he is giving to the assessee expenditure for what? For the treatment of the illness of COVID-19, whether for the assessee or for treatment of whom? For the assessee or the family member. Family member who and all are, sir? Spouse, children, and parents, brothers and sisters who are dependent. Yes, if that is the situation, for this, any person is giving to the assessee expenditure for COVID treatment, 2-3 conditions should be satisfied. First condition, whether the assessee or the family member should be COVID positive. COVID tested, he should be positive. Second condition, from the date of the COVID date of he testing COVID positive till 6 months expenditure only, he can say that he can say that it will not be chargeable any income from other sources. So what if 7th month expenditure is also included? If 7th month expenditure is also included, then in that situation, the 7th month, up to 6 months, it will exempt. Up to 6 months, it is exempt. It will not be chargeable income from other sources. But more than 6 months, it will be taxable. And to the income tax department, you have to give all those documents that you are COVID, you have COVID-19, all this expenditure is for COVID-19 treatment, all the bills and all. Yes, this within 9 months of the end of the financial year, you have to give it to the income tax department. Next, sir, regarding COVID also, if the death of the family member, if the death because of the death of the family member, employer is giving any X amount of money, or other than employer, any person is giving any X amount of money up to 10 lakhs, up to 10 lakhs money to the assessee, they are giving, yes, and assessee is receiving within 12 months from the date of death. The family member died, from the employer or from any other person, the assessee is receiving within 12 months from the date of death. Let's say date of death is 1st Jan. Within 12 months, within 31st of Jan, he is getting what? He is getting the money. Yes, in this situation, you have to make sure that it will not be chargeable and income from other sources if from the date of he tested COVID positive within 6 months. Within 6 months, he should have died. This is the first condition. Second condition, within 9 months of the end of the financial year, you have to give it to the income tax department documents such as he is a COVID positive, his death certificate from the medical practitioner, and also what amount he received. All these information has to be mentioned, yes or no. Yes. And so regarding section 47, I told you that it is these and all are not transfer for capital gains. One is HUF partition, next is holding company to 100% subsidiary Indian company, or 100% subsidiary Indian company to holding Indian company, or amalgamation or demerger. The person who is receiving it, this also will not be, this also will be exempt. This also will be exempt. He will not be falling. He won't be taxed under income from other sources. Who is receiving? If it doesn't matter, the amount is more than 50,000 and all, it doesn't matter. Yes, sir. No. I told that relatives would be exempt. So what is this relative definition? Assessee, assessee, assessee's parents, father, mother, then their lineal ascendant, their grandparents and their spouse, a grandmother and all. Yes, these are relatives. Then the father's brother, our uncle, assessee's uncle's wife. Then even fathers or mothers, please, sorry, fathers or mothers uncle and their wife, and also mother's uncle and their wife, so which is basically assessee. Father, mother, grandparents and spouse means grandmother, and both fathers and mothers brother, which is for us it is uncle. Yes, our father brother is uncle, uncle's wife, and fathers and mothers sister, which is auntie and her husband, and our brother and our brother's wife, our sister and our sister's husband. Yes. Now, after all this happens, then what will come? One day we will get married. Spouse. Even spouse is also relative. Spouse parents is also relative for the assessee, and spouse grandparents also a relative for the assessee, and um, you and your spouse hard work, lineal ascendant, children and their children, grandchildren, their spouses. Yes, also spouse, brother and sister, and their partners, spouses. Yes, sir. Regarding capital asset, if the immovable properties is a capital asset, we have to see section 50. Section 50C will apply if the stamp duty value is more than 110% of consideration. The same way, if the immovable property is stock in trade, then in that situation, that immovable property, we have to see whether stamp duty's value is more than 110% of consideration. If yes, then sale consideration will be SDV. Yes. Yes. All this we have again seen, sir, regarding same 50C. If the we regarding the which SDV date we have to take. Should we take the date of registration or should we take the date of agreement? We have already discussed few minutes back. And also, if the assessee is not happy with the SDV amount, then assessee can go and ask the assessing officer. Assessing officer will go and ask the valuation officer and value. So the SDV or the valuation officer amount, whichever is lower, will be the SDV. Yes, all this we have discussed. Same. Next, if shares are issued at a premium, then what to do, sir? It will be then we have to see which company has issued it. Company which is not where the public are not substantially interested. That company, if it issues, then uh, issue price minus fair market value will be the IFOS. But you have to see that issue price, is it more than two things? One is face value. Next is fair market value. Yes or no? Yes. So if the closely held company, if they are issuing shares at a premium, then you have to see two things. One is issue price more than fair market value? Second thing is issue price more than face value? If these two conditions are satisfied, then issue price minus fair market value will be the income from other sources. Next, if you are getting entrance on compensation or enhanced compensation for compulsory acquisition, you are getting interest because central government has not given the compensation on time. For that we are getting interest. Then in that situation, in the year of receipt, it will be taxable, and also 50% from the interest, 50% will be deducted. It will be, this is deduction under section 57. 50% will be deducted. Balance amount will be taxable under income from other sources. Next, family pension. Family pension. If there is a pension taking place, and if the because of the death of that particular assessee, the family will get the award money. Yes or no? Yes. In because of the death of the employee, family will get the money. In that situation, how to compute family pension? What is the family pension received minus deduction under section 57? 1/3 of the family pension or 15,000 rupees, whichever is lower, will be considered as deduction. The balance amount will be income from other sources. But if you are choosing a default tax regime under section 115 BAC, new tax regime, then instead of 15,000, it will be 25,000. So which is 1/3 of the family pension or 25,000, whichever is lower. Yes or no? Yes. And if you are the member of armed forces or including paramilitary force, and you died when during operation, during any kind of service, when you are servicing, you died, then in that situation it is fully exempt. Nothing will be taxable. Family pension will not be taxable. Or you have got gallantry awards. Those employees have got gallantry awards. What are the such as V Chakra, Param V Chakra, Maha V Chakra, or any other gallantry awards which is prescribed by the CG? If we have got that, then in that situation it is fully exempt. For though the family don't have to pay the taxes or no? Yes. And if advance has been forfeited, why advance is forfeited, sir? During capital asset is going to get transferred, but negotiation, you got the advance, and after that there is a negotiation, and the buyer is because of negotiation failed. You are keeping that. You are keeping that advance. You are keeping that advance. In that situation, if the advance, if it is received before 1st April 2014, then you have to reduce from the cost of acquisition when you are selling it actually. But on or after 1st April 2014, if you have forfeited the advance, then it will be falling under income from other sources. Yes, sir. Yes. Next, sir, you are getting compensation from any person other than employer. If let's say first two things. One, if you are getting compensation for what? For termination of employment or modification of terms and condition in the employment, but you are getting it from the employer, then it will be chargeable under salary head. But if it is not, there is no employer employee relationship, that means you are not receiving from an employer. then it will be falling under the head income from other sources. Yes or no? So, sir, if the sum of life insurance policy, if it gets matured and we are receiving it, yes, is it exempt? Yes, as per section 10, clause 10D, it is exempt. But for it to be exempt, the premium amount, the limit of premium amount in a financial year, you should have paid. There is a limit. So, what is the limit? If the policy is issued before 1st of April 2003, then it is completely exempt. There is no limit and all. But if the policy is issued from 1st April 2003 to 31st March 2012, then if the premium is up to 20% of the capital sum assured, actual capital sum assured, then in the up to 20%, then the when it is matured and including the bonus is exempt. Yes or no? And if the policy is issued between 1st April 2012 to 31st March 2013, then the premium is, if you pay a premium up to 10% of the actual sum assured, then the sum assured including the bonus is exempt. Sir, but if you have issued the policy on or after 1st April 2013, then up to 10% of the premium of sum assured only you have paid, then it is okay. It is okay. But there is an exception for 1st April 2013. If you are severely disabled or if you have a disease under section 80DDB, then if the for these people, if the policy is issued on or after 1st April 2013 and the premium paid is up to 15%, not 10%, up to 15% of the sum assured, then the what is the sum received including the bonus is exempt. Yes or no? Yes. So which is either 10%, 15% or 20%. Yes. But let's say some received including the bonus, if it exceeds 10%, 15% or 20%, is the exemption available? No exemption is available. In that situation, it will be taxable under the head income from other sources. Yes. What is sum assured minus what is the premium paid? If you have not claimed deduction, you will be reducing the premium. Yes or no? Yes. But for policy other than unit linked insurance policy, if you have issued the policy on or after 1st April 2023, not 13, 2023, and the exemption which you saw, it up to 10% if you have paid. Exemption will be available, yes, but one more condition extra you have to make sure that the premium payable in aggregate, if you have issued for more than one policy in a financial year, should not exceed 5 lakh rupees. 5 lakh rupees you should, is the criteria, yes or no? 5 lakh rupees if the policy issued on or after 1st April 2023. Sir, yes. In that situation, sum assured minus total premium paid. If the premium where deduction has not been claimed during the premium paid previous year, yes. On the date of, if the death of the person, then the sum assured will be received by whom? Received by the legal representatives. For that and all, there will not be tax. And for key insurance policy, if it is not chargeable under salary or if it is not chargeable under PGBP, then it will be falling under income from other sources. Yes or no? Yeah. Exemption under section 10. Sir, individual, if he is a person resident outside India as per FEMA Act, or if the RBI permits him to have an NRE account and he is having an NRE account, and because of him having money on the NRE account, the interest is being credited for him. Interest is being credited for him. This interest is exempt. Otherwise, interest is generally taxable under income from other sources, but this interest is exempt. Yes or no? Yes. And next, if due to any disaster such as catastrophic calamity or a grave occurrence, whether it is natural calamity or it is man-made calamity like accident or negligence, example fire and all happen, it got electrocuted, yes, and because of this there is a damage in the property or there is a damage in the environment or there is a death or suffering happens, and because of this compensation has been given by the central government, state government or local authority, then this compensation is exempt under section 10 clause 10 BC. Yes or no? Yeah. Next, interest on post office bank account. If you have a post office bank account and interest is being credited for this, then it is exempt up to 3,500 for an individual, and if it is a joint account then 7,000 rupees. Yes or no? Yes. And scholarship you are getting for education, that is also exempt under section 10 clause 16. And if MPs and MLAs, it is chargeable under which head? MPs and MLAs remuneration will be chargeable under income from other sources, but their daily allowance and constituency allowance is exempt under section 10 clause 17 if they have chosen, they have opted old tax regime. If they have opted default tax regime under section 115 BAC, which is new tax regime, then this exemption is not there. Even that also will be that particular allowance also will be taxable. Yes or no? Yes. Payment by central government or state government or any institution approved by central government or state government where they are rewarding, whether in cash or in kind, it is exempt under section 10 clause 17. Yes or no? Yes. Sir, if you have win any lottery winnings, race horses, crossword puzzles, card games, betting, gambling, any kind of winning, any kind of casual winning you have won, yes, then it is directly taxable at the rate 30% plus health and education cess. Yes, along with this, there is no basic exemption limit, so you cannot read from this from the income. You cannot reduce basic exemption limit that particular eligibility you don't have. You cannot deduct from Chapter 6A deduction, and also that from the income is you have any expenses you have incurred to gain that income. That expense also you cannot deduct. Yes or no? Yes. And as per section 57, there are few more deductions. We have already seen regarding the family pension. We have already seen the interest on compensation or enhanced compensation from compulsory acquisition. Yes, along with it, if the dividend or interest from mutual fund has been earned, then but this him to buy the shares and for him to buy the mutual fund or unit trust of India, he has borrowed the money and he is paying interest for this. For this interest he can deduct from the dividend or this income. Yes, but up to 20% of the dividend amount or income on up to 20% only he can claim deduction. Next, the same way if he has borrowed money to invest in the debentures, then he is earning income, debenture interest. This particular debenture interest also, interest how much amount is he is paying, that much amount fully he can claim. Next, interest on securities or dividend. For this, for him to realize the dividend or for him to realize the interest on the securities, if he is paying any commission, that is allowed as deduction. Next, recovery from the employees contribution to the provident fund, superannuation fund, employee state insurance or any other fund. For this, make sure that any you can deduction is allowed if you have made the payment within the due date. Yeah. Plant and machinery and furniture. Plant and machinery and furniture. If it is not falling under PGBP, then if it will be if it is falling on income from other sources, then make sure that current repairs and premium paid against the risk of damage and destruction is there. Yes, this two things you can claim deduction. Other expenses allowed as deduction. If it is wholly and exclusively incurred for what to earn that income, you have claimed it, and it should never be a capital expenditure. It should be a revenue expenditure, and that particular expenditure is incurred in the current previous year. Yes, yes. Next, sir, for following as per section 58, following expenditure will not be allowed. One, personal expenditure cannot be allowed. Next, if you have paid more than 10,000 rupees, or in cash, in bearer check, or in cross check, then it is disallowed. Yes, we have seen this and all in PGBP. And if it crosses 35,000 for leasing, hiring of a vehicle, yes, that also is exempt. Generally it is 35, 10,000, 35,000 for this situation. And remember, you have to deduct TDS for section 40A 1 and 40A 1A. Remember, 30% deduction or 100%, it will be disallowed, yes or no? Yes. Yeah, what you cannot claim deduction in the income from other sources, or in expenditure on casual income, lottery winnings, anything. Can you claim expenditure? You cannot claim expenditure. Yes, sir. Yes.